Hi everybody, Hindenburg is back again. But this time, it's not just Adani versus Hindenburg, it is Hindenburg going against the Security and Exchange Board of India itself.
Hindenburg research is back.
Hindenburg versus SEBI chief saga.
It's another bombshell from Hindenburg.
Involving Madhvi Puri Butch, who is the chairperson of the Securities and Exchange Board of India.
The firm also claimed that Butch publicly confirmed an investment in an obscure Mauritius fund.
Allegations are more of a personal attack on Mrs. Butch and her husband.
It is supposed to protect Indian investors, but its chairperson is accused of doing the opposite.
For those who don't know, SEBI is the watchdog of the Indian market. So, SEBI is the entity which is supposed to prevent malpractices in the Indian market. But Hindenburg this time says that SEBI itself is involved in a malpractice. And just like last time, ever since this report has come out, the Adani stocks have gone down by 2%, 4% and 1.1% for Adani Ports, Adani Total Gas and Adani Enterprises. And the beauty of this allegation is that regardless of whether this is true or not, we were able to discover a beautiful web of transactions and money flow which will blow your mind. Now, do you realize this is a very, very big deal, because if the SEBI chief or SEBI are found to be guilty of these allegations, then the confidence of the investors will be completely shattered from the Indian market. And this applies to both Indian as well as global investors. And with these structures, you will understand how money could be rotated through a complex web of companies to manipulate the market. And this is something that I'm very, very excited to share with you. So in this episode today, let's break down this complex web and try to understand what exactly does the Hindenburg report say about SEBI, how did the SEBI chief respond to these allegations, and most importantly, who is the winner and loser in this second round of Hindenburg versus Adani saga. This video is brought to you by Growth School. People, when it comes to jobs and economic challenges, I want to clarify that no party has a magic solution to the job situation in India. While government actions take time, you can boost your career now by joining Growth School's masterclass. They will help you become the top 1% by leveraging artificial intelligence. Growth School is organizing Asia's biggest online AI masterclass, which is usually a paid masterclass. But for thinkschool viewers, it is completely free. The first 1,000 people who register will also receive a bonus worth 5,000 rupees. In this masterclass, you will learn job hunting strategies, salary negotiation techniques, and how to solve complex data problems with AI. You will also get tips on personal branding and business strategies using AI. Growth School is recognized as LinkedIn top startup for both 2022 and the year 2023. This masterclass is designed for everyone, whether you are in tech or a non-tech person like in sales, marketing, HR, operations, or an entrepreneur, or even a freelancer. It could be a game changer for your career. I have also attended this masterclass and I highly recommend it to every single person. And many people have already started getting good results with the help of this masterclass. So if you find this useful, register using the link in the description before the free slots are over. And now, on with the episode. People, before diving into this case, here's a quick summary of what exactly happened between Adani and Hindenburg.
Adani Group companies continued to slide for a third straight session.
$6 billion gone in a day.
Short seller Hindenburg Research accusing the conglomerate of share price manipulation and fraud.
Using shell companies to pump up the stock of Adani Enterprises.
The report is a malicious combination of selective misinformation, baseless and discredited allegations.
India's Adani Group says it's exploring legal action against a US short seller, Hindenburg Research.
He says Hindenburg is making an attack not just on the company, he's also making an attack on India and its growth ambitions.
The fundamentals of our company are very strong. We will continue to focus on a long-term value creation.
So Hindenburg is a market research company in the US with a very simple strategy. They dig into big companies, they find dirt on them, they release a report to the public, and during the same time, they take short positions in the market. Eventually, when the stock price of this company falls, Hindenburg makes a profit. Last year, Hindenburg targeted the Adani Group. So if you know the Indian market, public companies in India are not allowed to own more than 75% of their own company. But Hindenburg said that Adani owns more than 75% of its shares. And when this was made public, it led to a huge uproar. But after that, Adani dismissed all these allegations. And here's where SEBI was appointed to carry out an independent inspection of the entire case. And after the investigation, SEBI discredited Hindenburg's allegations. So this time, Hindenburg came up with a new report accusing the SEBI chief herself of not carrying out the investigation transparently. And here's where the Hindenburg 2.0 saga started.
The biggest corporate drama in India's history is turning into a sequel. Short seller Hindenburg Research has published a new report accusing the Indian regulator of a conflict of interest with the Adani Group.
Now, SEBI is basically India's market watchdog. It is supposed to protect Indian investors, but its chairperson is accused of hiding alleged vested interests.
And this is happening first time in the world in the recent history, where a stock market regulator and its chairman has been directly pinpointed of having an investment in a company which they are already investigating.
So now the question is, when SEBI has discredited Hindenburg's allegation, when Adanis have denied it, now what exactly is the Hindenburg report trying to convey? Well, here's where the Hindenburg report mentions something called a convoluted web structure. And they say that this is the instrument that SEBI chairman Madhavi Buch, Adani, and an Indian wealth management company called IIFL have used to move illegitimate money into the Adani Group companies. So, let's start by understanding what exactly is this convoluted web structure. The first thing you need to understand about these convoluted fund structures is that it is a multi-layered structure. So, it first has a master fund. This master fund invests in several smaller funds. Then each smaller fund operates with its own investment strategy. For example, let's take a company called Alpha Investments, which has 3 funds: Fund A, Fund B, and Fund C. Now, each of these funds has a different portfolio of investment. So, Fund A could be investing in just tech startups, Fund B could be investing only in bonds, and Fund C could be investing in equity. Then, each of these funds may have more subsidiaries in the form of A1, A2, A3, and B1, B2, B3. Now, here's where there are 2 more levels of legal and geographic complexity. So, A1 could be located in Bermuda, A2 could be located in Seychelles, and A3 could be located in Switzerland. So if you see the structure, there are 3 levels of complexity. Structural complexity due to the subsidiaries, geographical complexity due to their locations, and legal complexities due to the regulations in those locations. So because of these complexities, there is very less transparency. So now the question over here is, why do these kinds of complex funds exist in the first place? Well, that is because these funds give an entity 3 major superpowers. The first superpower is tax burden. So just like shell companies are opened in tax havens to save taxes, these complex financial structures are set up to avoid paying taxes on investments or to optimize tax benefits. Because if you look at these locations like Bermuda and Mauritius, they have almost 0 taxes. Sometimes they have absolutely 0 taxes. The second superpower that this fund gives you is that it helps you navigate different regulations of different countries. And lastly, it's meant to give you high return on investment. If this is clear to you, let's come back to the Hindenburg report. The Hindenburg report claimed that Adani is using a web of these convoluted funds to make illegitimate investments. And this time the report says that even SEBI chief is involved in this structure. So let's try to understand how does this convoluted fund structure look like in case of the Adani Group. So in this case, there is a parent fund called Global Opportunities Fund. Then in the second layer of this structure, there is a sub-fund called Global Dynamic Opportunities Fund, which is set up in Bermuda. And as we all know, Bermuda is a tax haven. Then there is another layer called IPE Plus Fund 1, which is set up in Mauritius, which is again a tax haven. And then this IPE Plus Fund 1 invests in the Indian stocks and derivatives. So if you look at the structure, we have 3 layers: Global Opportunities Fund, then there is Global Dynamic Opportunities Fund, and then there is IPE Plus Fund 1. Now, how did the Adanis rotate their money? Well, according to the report, the Adanis imported a power equipment for which they paid more than the original price. And the company that they imported this equipment from is called Asset Trade and Investment Private Limited. And this company is owned by Gautam Adani's brother, who goes by the name Vinod Adani. Secondly, Asset Trade and Investment Private Limited invested $40.3 million in Global Dynamic Opportunities Fund in 2013. And they also moved $100 million to Global Opportunities Fund. And then, as we already know, this Global Dynamic Opportunities Fund invests in IPE Plus Fund 1, which invests its money into the Indian stock market. So the report says that Vinod Adani, who's the brother of Gautam Adani, He used this structure to invest in the Indian markets with the funds allegedly siphoned from over-invoicing of this power equipment. And this over-invoicing was done to the Adani Group. And the highlight word in this entire statement is the word allegedly. If this is clear to you, let's see the involvement of IIFL and SEBI chief. People, according to this report, IIFL has a history of setting up these convoluted fund structures. In this case, IIFL has set up this web of funds for Adanis. Secondly, the report says that the reason why SEBI is not carrying out an investigation is because the SEBI chief Madhavi Buch and her husband Dhaval Buch both have investments in one of these funds. And as we can see in this chart, in 2015, they invested in Global Dynamic Opportunities Fund, where even Asset Trade and Investment Private Limited has invested, which is owned by Vinod Adani. At the same time, SEBI is probing into two funds, Emerging India Focus Fund and EM Resurgent Fund. These funds are investors in the Adani stocks. But if you look at their beneficial owner, it is a company called Trident Trust Company. And this company is administered by Global Opportunities Fund, which has a sub-fund called Global Dynamic Opportunities Fund, where Madhavi had invested in 2015. This is how Madhavi Buch, Vinod Adani, IIFL and the Adani stocks are connected together. This is the reason why Hindenburg says that Madhavi has a conflict of interest when it comes to investigating into the Adani case. And the report says that although Madhavi had transferred all the shares to her husband, she continued using her personal email to communicate with the fund. And because of these investments and the conflict of interest, the Hindenburg report says that SEBI has not carried out its investigation properly. This is the first allegation that they have. The second allegation that they have is that Dhaval Buch, who is the husband of Madhavi, he has no experience in investment because he has worked at Unilever, which is a consumer products company. But then later, he switched to suddenly become a senior advisor at Blackstone, which is one of the largest investors and sponsor of a real estate asset class called Real Estate Investment Trust, or REIT. Now, until then, REIT was not so prevalent in the Indian market, and the first REIT went IPO on 1st of April 2019. So, the Hindenburg report says that after Madhavi became a member of SEBI, then Embassy obtained SEBI's approval for REIT and it IPO'd on 1st of April 2019. So from what I could understand, it basically says that Madhavi favored the IPO of REIT because her husband worked for a company that dealt with REIT. These are the points that Hindenburg points out. If this is very clear to you, let's understand SEBI chief and her husband's response to these allegations. Let's start with the first set of allegations about her investments. For these allegations, she has clarified that the investment was made way back in 2015 when both Madhavi and her husband Dhaval were private citizens living in Singapore. So this was long before she took up her role at SEBI, and this was a personal investment which was made without any connection to her future position at SEBI. And she clarified that the reason why she invested in that fund was because the fund's chief investment officer is a close friend who goes by the name Anil Ahuja. And most importantly, she redeemed all of her investments in 2018 itself. And what's funny is that she became the SEBI chief in 2022. So she practically redeemed all of her investments almost 4 years before she became the chairperson at SEBI. Now, the Hindenburg report over here points out that Anil Ahuja was a director of Adani Enterprises for 9 years ending in June 2017. Now, is this wrong? Not at all. Is this illegal? Not at all. Is it questionable? Well, according to the Hindenburg report, yes. But you decide whether this is questionable or not. I will leave it completely up to the audience. The second allegation is regarding Dhaval's appointment at Blackstone. To clarify this, Madhavi laid out the timeline. Dhaval was appointed as a senior advisor to Blackstone in 2019, which was well before Madhavi took up her role as a chairperson at SEBI, which was in 2022. Before this, she was working as a whole-time member of SEBI starting in April 2017. And she mentioned that Dhaval got his job because of his capabilities and not because of something else. He is an IIT Delhi graduate and has years of experience at Hindustan Unilever, both in India and globally. Madhavi also made it very clear that as soon as she was appointed as SEBI's chairperson, Blackstone was immediately added to the recusal list, meaning she took steps right away to ensure that there would be no conflict of interest in any matter related to Blackstone. So in short, she made it very clear that Dhaval's advisory position at Blackstone had nothing to do with her capabilities at SEBI. And there is no overlap, no insider information, no secret deals, just a professional role based on his expertise. This was the response of SEBI's chief. And when it comes to Adani's response, This time the Adanis have just said that Hindenburg allegations are malicious, mischievous and manipulative to make personal gains. So this time the Adanis are not taking Hindenburg seriously at all. This was the story of Hindenburg, Vinod Adani and the SEBI chief. So now you decide who's right and who is wrong. And regardless of that, the one thing that came out very beautifully in this entire episode is this convoluted structure, and I don't know how you felt about it, but then guys, I had a lot of fun looking at these interesting structures because it's very fascinating to understand how billionaires can actually use these complex structures to move billions of dollars across the globe just so that they could save up on taxes. This is something that I absolutely love studying, and I just hope you learned something valuable from this case study as well. That's all from my side for today, guys. If you learned something valuable, please make sure to hit the like button in order to make YouTube Baba happy. And for more such insightful business and political case studies, please subscribe to our channel. Thank you so much for watching. I will see you in the next one. Bye bye.